The economy is complicated. It is that fact that most politicians rely on when they break the unfortunate news that public spending must be cut and the poorest people in the country must learn to suffer more because the social safety net is tearing under the weight of their cries. In fact, their narrative might be compared to that of a magician who relies on misdirection and sleight of hand to convince their audience that what they are doing really is magic. But what if there was a way of presenting the economy that could be understood by more people, exposing the sleight of hand that politicians use to deceive and mislead? Of course, this version would be simplified, but just enough to introduce the basics to those unfamiliar and to offer a foundation for the more intuitive to build on. So let's do that. The magician always begins by selecting a volunteer from the audience. Someone relatable, trusting, ordinary. Our first volunteer for this trick is the working class. How do the working class fit into the economic picture? Obviously through their work. The factories and retailers that employ them to make and sell the goods that contribute to the nation's GDP pay the workers a wage. The wage is usually paid into a bank account. But before it gets there, it will be subject to taxation that will be paid to the government. In the UK, for example, income tax is roughly 20% and national insurance 8% on earnings, below £50,000. Beyond the taxation to pay for public services, it is common for the working class population to spend the rest of their paycheck on the goods and services offered by the private sector. In fact, they often spend more than 100% on their income. And that means we will have to understand credit. We will come back to this later because credit will be where the magic happens. It may often be the case, of course, that some of the working class are self-employed, and in their work they offer services to our second volunteer, the middle class. The economic picture for the middle class is very similar to the working class. Their income tax will rise to 40% on earnings above £50,000 and their national insurance to 10%. But they will also spend most of their income on goods and services, and they will also rely heavily on credit. At this point, it is worth explaining what we mean by credit. In our economies, credit is the relationship between a borrower and a lender. The lender gives the borrower money to spend on goods, services and assets. This creates a debt the borrower owes back to the lender. Let's take buying a house. That type of transaction is rarely done directly between a buyer and a seller. There is usually a middleman, a lender, and that is usually a bank. The bank agrees a mortgage with the buyer and they pay the seller on the buyer's behalf. At that moment, credit is created. The bank becomes a lender and the buyer a borrower. The money does not come from the bank's vault or from its savings. The credit created is the magic trick, because the money appears out of thin air, just like a magician waving his magic wand. The money will appear in the seller's account and they will be able to spend it. That is new money being introduced to the economy. The buyer will then begin the process of repaying that money as mortgage debt to the lender. And who is the lender? To answer this, we must pull back the curtain to reveal the magician's trick. It will make this story just a little bit more complicated, but it will be worth the effort. You are supposed to answer the question by saying the bank. That is what the magician wants you to say, and you will not be entirely wrong, but you're not entirely right either, because the bank does create the money. But what you don't often see is that these mortgages are then passed to investment banks. They bundle them into mortgage-backed securities. But the key move is that these are then sold to wealthy investors. Why would anyone buy debt? Because the debt must be repaid, and it is repaid with interest. And what is interest? When credit is created, there is always some risk involved. The borrower might default. Interest is the incentive to lend. What it means is that the borrower always pays back more than the loan that they received. and that means that the person who owns the debt is due to make a profit. And that brings us to the government. The government is like a plant that is presented to the audience as a volunteer. The government understands the trick, but it often pretends that it does not. It presents the economy as a closed loop. We often hear that money is circulated through the economy. If you think of it as a closed loop, their job is simply to balance the books just like everyone else. That is to say that the amount of money that they have access to is limited, and they must make sure to get the balance right between taxation, which is government wages, and spending. But then we hear that the government, usually the previous government, has not been particularly good at this balancing act. And just like everyone else, they have been forced to borrow money to make ends meet. This can seem confusing at first because we are forced to wonder who they borrow from. Government borrowing is different from the borrowing of ordinary people. They don't borrow from commercial banks. Instead, they create government bonds, bills and notes that are sold via investment banks on the financial markets. That means there is no magic trick of creating new money. However, there is the image of another impressive trick. A new way of investing in the economy, providing more money for public services, more money for the working class and the middle class, more money to spend on goods and services. But we must remember that this extra money is debt. It must be paid back with interest. So the question must be asked, who is the government indebted to? Who owns the debt? In the end, it is the same people who profit from our debt. Like any magician's show, there is magic for the audience to see, and the real trick hidden from view that only the magician sees. In this show, the magic is the creation of money out of thin air, the government spending on public interest, and the apparent growth of the economy. But the real trick is the interest. Just like the magician, the government directs us towards the economic loop, the place where money supposedly circulates. But the trick is being performed outside of that loop. Most government and private debt is held by a relatively small number of wealthy individuals, hedge funds and institutions who benefit from repayments, and crucially from interest payments. This wealthy class owns our mortgages, the businesses producing our goods and services, and even the hospital and school buildings that the government rents. The primary source of wealth is debt repayment and interest, money being extracted from the economy rather than circulated within it. For this reason, I refer to them as the transcendent class, because their wealth places them above and outside the economy that you and I depend upon, insulated from everyday economic realities faced by the working and middle classes. Their influence even transcends governments and banks. And through their powerful influence on politics and economic policy, they shape the rules to continually secure and expand this privileged position.